When I was broke, I had rich habits. When I was broke, I had rich habits.
Yeah. What's going on?
Not too much. Welcome back. Season 2, episode 9.
Pretty confidence, episode 9. This is the Master Keys
10.
podcast.
Episode 10. I'm getting
Episode
this at a 10 in
10.
the back.
Misplaced confidence as usual.
Yeah. Neal and Drino.
Chandler Halliburton.
And we're here, Master Keys podcast.
What are we talking about today, Neil? So we're going to update on our personal news as always. Then we're going to go into speaking about worldwide news. Obviously, the terrible situation in the Ukraine, how that's impacting markets, inflation, the crypto space, and all of that.
There's a rumor that you mentioned of some changes to down payments and loan rules, which could be massive.
Massive changes, potentially 35% down payments on investment properties. Do you hear that? That makes me sick.
Yeah. USA is looking at adoption of crypto and potentially some of the options with that.
Yeah, and then we're going to cover a couple of really specific topics. The question of first-time home buying: should I buy a single-family home or should I buy a multi-unit property? We're gonna debate that for a little bit, and then we're going to go into what to expect if you're going to buy your first home in 2022.
Getting beat up.
Getting just massacred out there.
And we're going to talk about Chandler's new shirt.
New shirt. Who dis?
To start out like we always do, what do you got going on, Chandler? I'll let you go first. Usually I go first.
Well, I'm super excited. I firmed up on a development site in the South Shore. So that's officially firm,
Congrats.
done deal, approved. It's as of right, which is super cool. We're going to do some subdivision so that we can phase it out. And we're actually going to do the stacked townhouse model, which we've talked about a little bit on the show before. And I don't know if people know what it means, but they kind of look like townhouses from the outside, but there's actually, rental units inside. So the cool thing about it is it'll be wood frame construction, so it's a little more economical. Because it's the townhouse form, your builder options are a little bit more, like you can get a smaller scale builder to do it. And because we're doing them in phases, like you do 6 townhouses, then you do 6 more, it's a bit more manageable of a project. So, pretty pumped about that. It'll be about 40 to 50 units, depending on how we structure the townhouses, and probably built in 3 phases.
Can you share what you spent on the land?
Yeah, we're somewhere probably like around 14, 15 a door.
Okay.
Paying a bit more just because there's an existing structure on there that's going to generate some revenue in the meantime.
Yeah.
It made it easy to finance. And there's an option there because of the sizing. We talked about this before. When you get a smaller scale project, your price per door is actually more valuable, where that can be phased out individually. Like one of the phases is going to be individual PIDs for each townhouse. So one run of 6 townhouses that are going to have a main unit plus a basement suite could actually be sold off individual. So that land is worth conservatively $60,000 a unit for those townhouse plus HST, right? So while 14, 15 a door isn't usually that exciting in the context of the financing, the ability to repackage it, and the scale of the project, it's a pretty good one.
Yeah, I'd say that's a pretty reasonable deal. It's kind of what things are trading for down there. I mean, maybe a little bit less, but like realistically, like you said, there's some options there. And
It's also
there's
as
something
of right, so not $1 spent for planning and
as of
stuff.
right.
Like we could pull a permit.
There's a building on there already.
Yeah.
There's multiple things.
Yeah.
So that's good. You framed up on that. You got a couple other good things on here.
Yeah, I close on a 6 unit on, a week from today, a week from yesterday.
Nice.
So closing on that 6 unit. So that's one where I got a good deal on the property and did some kind of creative things moving around with financing to effectively get into the property with no money out of pocket. So super pumped about that.
I think we're going to do a Patreon episode on that.
Oh, yeah.
We'll call out on that. We're going to start doing Patreon. That one there, we're going to do an episode especially on how he was able to get into a 6-unit property with no money down.
Yep. And then I've got an offer agreed to in principle on that 12 unit that I've been going after for a while. We've ironed out all the terms. So those documents are out there waiting for a signature, and then preparing the offer documentation for that combination site that I mentioned, 9 PIDs, many different types of buildings. So hopefully going to get that rolling here shortly too. So
That's exciting. You got lots of things going on.
yeah, they're all kind of small, like a little bit mixed bag of stuff, but that is what makes it interesting and kind of fun. So what about you? What do you got going on?
I don't have very much exciting stuff going on.
I doubt that. Yeah, you got stuff.
But like, so I've talked about 100 times on here. I'm working on these land deals, and I've been mentioning it to you off the mic. It's just I'm struggling a little bit with the numbers because I'm trying to make the transition now from like these small resale wood frame buildings that I'm buying and going into a new construction build. And whether it be a high-rise building or like a low-rise or mid-rise wood, I'm finding the numbers a lot tighter than I expected.
Yep.
Like the cost of construction is quite high, and so I'm realizing now that I either need to basically GC and build it in house to be able to make a decent amount of money. Because the problem is the land. Like a lot of land that you've purchased, you were fortunate you got it at really strong rates where it's like they weren't sold necessarily as development sites.
Yeah.
So you get these great deals on them. Now I'm trying to buy like an approved site because I'm hoping to get started with something sooner, and so I'm really struggling with the cost of the approved site plus the cost of construction. And what the end value numbers are coming out to, it's just I've been kind of getting flaky. I'm starting to think I might just pull trigger on one and try and work it through and see if I can make it work. But I really do see that I might have to build it myself to be able to save, like to get that lift, right? Where I'm starting out, I need the lifts out of these properties.
Can you GC something of that scale? Because
I wouldn't go too crazy. I'd probably go to like a 30 unit to start.
Right. Okay.
So that I could pull off and then have to roll into something bigger. Or potentially signing on with like there's project management companies that could be involved. That'd be a little less costly, and it'd be like a fixed couple $100,000. I know what it's going to cost me, and they can be involved. I also went to Moncton. I don't know if I mentioned in the last one. I went to Moncton last week and looked at some multi units there. Their price per door was lower. Like there's multiple places in Canada that their price per door is lower, but there's kind of a reason. And theirs being that their property taxes are very, very high.
Yeah.
And it dramatically impacts their property taxes are about a little over, I think, double what it is in Halifax, and Halifax is already very high. And so it has a huge impact on the bottom line and the appraisal values on the units, obviously. But the city of Moncton is having a meeting about this in about 2 weeks to reduce it. And I'm sure I think we talked about it before. There was a news article that they're looking to reduce theirs. They are well overdue. We made some comments about Halifax is increasing theirs, but we're still like literally half of what they are. So anyways, long story short, right now Moncton I was struggling to find being a great deal, but potentially in the future. They have the nice thing in Moncton, I think, was that the structures, they have a lot of like mid-rise 30, 40 unit buildings, which we don't have as much of here. I feel like it's either a lot, there's a ton of like sixes and 12s, and then it goes straight to like the massive 100 unit buildings.
Yeah.
Like we don't have this mid-rise, low-rise.
Not much of it.
No. And you're seeing the new ones now that are getting built outside by big companies, but they're all owned by REITs and they're relatively new and they're massive, like 200 unit buildings.
Yeah.
But yeah, so that's going on. More so in the background, I've been just working on my investments. We've talked about it a few times, obviously, with things with oil and gas. And right now, with interest rates going up, it's beating a lot of things up. So I've been just trying to spend a lot of time and energy kind of getting my plays strategized there. And like, don't want to buy banks because I think with all these rates going up, there's going to be a lot of people defaulting and there's going to be some issues that they face immediately. But in the long run, obviously, they'll pan out of having made a lot of money.
Yeah.
But in the short term, I'm trying to figure out what the next play is there.
Yeah, obviously, we're not financial advisors.
Yeah, exactly. Not financial advisors.
But
I think
we can set up a Patreon site.
I was gonna say same thing on the Patreon. What we intend to do is some of the trades that I'm making or the investments I'm making, I'd be happy to share them on the Patreon. And if somebody's interested in following that, that's your own decision to do so. And you can kind of hear my logic and go with it if you're interested. And then the last thing right now that I'm working on is we're trying to build kind of an in-house software to help manage the project management for construction and renovation of the buildings. So when we get a building, there's an automatic system in place that will tell you everything you need to do. For us specifically, it'll give contact lists. It'll automatically send out notifications. You can tie your subcontractors into it, your own staff into it. And this is in an effort for me to be able to operate the business a little bit further, like more remotely.
Yeah.
And then also eventually I want to be able to offer that out to people as well.
Yeah, there have been a few companies try to build out apps for project management like that. The tricky thing is sometimes they're almost larger than what you need and they're hard to customize to your own thing. So it's nice to have something that you can then apply to your own in-house. And then if you have local contractors to be able to tie right into that is
I think my objective with it is basically to create one that does the Burr model.
Right.
Like there's so many people doing that, and I found every software, like you said, is either for a massive scale or like a very like basic. I feel like this would be like a nice mid-level, and there's a lot of people doing it. It wouldn't be anything crazy, but it would just allow you to kind of keep pace. And so if you have 2 or 3 of them on the go, I find it already starts to get a little bit funky. Like, oh crap, I forgot to order the doors for X building. Right.
And even like able to prioritize things, what should happen first. You know, that'd be a really sick feature. That is the sort of stuff that we're also going to provide on the website once we start building out the website, which is another thing we got to get rolling on too.
That's underway, so that should be here soon. But yeah, that's pretty much what I have going on right now. Nothing too exciting deal-wise. I'm hoping to pull trigger on something soon because I do have some refinances coming in. This might be the first time that I haven't spent my refinance before it's anywhere close to coming in.
Man, I'm sitting on some cash now too because I've got to show a lot of liquidity for the build.
Oh yeah.
And it's driving me insane because I'm like, I normally don't like to keep any money. Yeah, especially money's going down every day right now.
Yeah.
Right. So I'm like, I do not want to have this money in my bank account. I want to be buying more property. However, I need that money for when the build starts.
Not suggesting living paycheck to paycheck, but live paycheck to paycheck.
Yeah, it just means you have to go out and get more paychecks. So it's just like a good motivator. The other thing I thought was kind of cool, by the time people are watching this, we'll be almost through Q1 of this year. Pretty crazy. Seemed like just yesterday we were doing our New Year's Eve special.
You're stressing me out.
A little optimal stress, man. You got to have a little stress to feel motivated.
That's insanity.
It's almost through Q1 of 2022.
I think everyone should think for a second. Are you happy with how things are going? I feel like I missed all of Q1. I don't know where I was, but I wasn't here.
Yeah, time flies by. And, you know, like we've always said, it's not a race and you just have to kind of set these like micro goals and, you know, look at what you're doing. But it's a good time to check in. 1 quarter down.
It's now a race. You're 1 quarter down.
Yeah.
Start running.
Now, yeah. So I always find it's nice to check in on that stuff. News-wise, I mean, things aren't getting any better over in the Ukraine. And that's caused a lot of uncertainty in the oil market.
Yeah, we had a spike up here, was it last week or 2 weeks ago, to $126 a barrel.
Right.
It's back down as of today, $106 a barrel. And I think that was basically the Middle East saying that they have some oil that they're able to provide to us in the immediate term.
Yeah, I think OPEC is going to release or ease some limits on certain producers in order to, you know, supply the market and keep pricing down a little bit. Because, it was getting dicey. I don't know what, depending on where you're listening, here it was up to like $1.86.
Yeah. I just came from Montreal. It was $2.20.
$2.20? Man.
Yeah, BC's over $2.
It's so wild because now it's like, it's going to go down like 10 cents. And we all go rush out and buy it as if it's such a great deal. But damn, man, that's expensive.
It's gotten to a point where I'm actually considering an electric car.
Yeah, probably you and everyone else. And how electric cars are going to be, as if it's not hard enough to get a car. Anyway, but I was thinking the same thing.
My
RAV4 is a really nice hybrid.
My client this morning said he has a Model 3 and it costs him $6 to fill up for 450 kilometers of range.
Well, now it's $9, so joke's on him.
Yeah.
And that's crazy. That's well, I mean, this is the thought too. There's been a lot of great news coming out about like alternative energy sources and that sector, but it takes years, right? So in the interim,
we're still on oil and gas.
We're still on oil and gas, heavily so, and petroleum products in general and all the forms they take for the foreseeable future. And they're going to have a place in the future no matter what people want to, you know, utopian believe or whatever. But some of these other things hopefully will be brought to market sooner because of this situation. I heard another rumor, and maybe you saw this.
This one sounds insane. You're going to scare everybody.
So shout out to Laird who sent this to me. It was circulating on Twitter. It was an image that said someone had insider information from some mortgage contacts about two things. One, that the down payment for investment properties was going to increase to 35%. And the second one was that down payments could not come from HELOCs or borrowed sources, effectively. And number two, well, it's kind of like always the case. Like HELOCs were secured against a property, so they were always sort of fair game, but you weren't technically supposed to be using borrowed funds to be providing down payments regardless.
Yeah.
So I think that'll kind of be navigated in an easy way. Like I think there'll be workarounds for that. The 35% down, I don't know, man. If it's true, it's a game changer because it's hard enough to get the 25% down. You're very opportunistic and lucky when you can get 15% down. You hope that maybe if the scenario goes great, you put 25% down and refinance to 85-15. If you can only like refinance to 65-35.
I guess it could happen, eh?
Anything could happen, man. Anything could happen.
I could see it because now they're like looking on average, the prices are way higher, the caps are way lower. I could see it making sense. This is what they already do in places like Ontario. Like the rule isn't 35% down, but none of the properties with cash flow make any sense at anything less than 35% down. So everyone just has to do that. Like when I talk to any of my clients, they're like, yeah, we're used to doing 35 to 50 down on our places.
Man, well, but here's the thing though. Those two items, item one, item two, move in opposite directions, right? Like if you got to put more money down and you can't get it from refinancing properties.
Well, yeah, but
it's there's a challenge.
There's no way for them to follow the no borrowed funds one. Like that's,
well,
if you have any other loans, then you're officially like,
well, and
you have
also
a car payment. Well, you borrowed the funds against your car to go buy the place.
Yeah. There's also when you refinance for the fact that you put a capital investment in the property, you're effectively paying yourself back.
Yeah.
Right. So I think that'd be a hard one to police, like you said. But I was actually hoping you were going to shoot that down and be like, there's no way that's possible. There's no way they'll have to put 35% down.
I'm thinking that there's no way, and then I'm sitting here going,
who knows?
there might be a way, because the fact that there's just the squeeze is getting so crazy where people are just not cash flowing on these places, and the appraisals aren't coming in anyways, and I'm seeing a bunch of my clients have to make up the difference.
But my question is always like, who would be the one that wants this? Right? Who's advocating for this? Is it major lenders? Is it Bank of Canada?
100%. It's banks and then the insurance. Like they're trying to do some risk mitigation. Like that's
You think so? Eh?
100%. It's getting. Think about all these places now. Like so, you look at a big part of Canada, like rental units sell for $300,000 plus a door, and then you got again your average rents need to get over. Then with the interest rates going up the way they are, we just saw this. I'm renewing at a B lender and it came in at over 5% for prime with like their best rate. So to then cash flow against that, you need like literally $1,800.
Yeah.
That's not including anything else. Like
Yeah,
the
yeah,
mortgage,
that's like a break even. That's
the
a
mortgage
break
payment
even,
on this
yeah.
place. This is a $375, which would be slightly more than what a unit sells for now, and the payment was coming out at $1,600. That's pre anything else.
That's
like,
no insurance,
Yeah.
no utilities, no management, no maintenance.
Yeah. So like once you put all that in, you need to get $1,800, and they're like, okay. There is so many brand new units now at $2,200 a month in every single city, or $2,400 a month. I think everyone's kind of seeing the red in the wall. Like there might be a point where we have the people, but we don't have the people at $2,200 a month. Do you know what I mean? This is where like my stress comes to with building.
Income not growing as fast as rents. Yeah.
That's exactly income not growing as fast as rent. So by doing this, it's going to slow that massive price growth that you're seeing on these based on falsified rents, right? Like people are like
Not falsified rents, but like
unachievable moving
yeah,
forward.
Yeah.
Like people are just not going
all-time high rents that aren't sustainable.
People want to sign the lease.
Rents,
Yeah, unsustainable rents. They want to sign the lease, but they're going to be unable to because they can't come up with the money to do it. And then you're going to have to drop your rents.
The other thing that's interesting is there's all this program just came out through CMHC targeting affordability, where you'll be able to refinance affordable units up to 95%.
Yeah, they're putting in some pushes here.
So, and having a chance to really think about this. Like, so what are they trying to accomplish? Basically, you can go 95 to 5 on affordable units.
Yeah.
Or you can go 65-35 on not affordable units.
Makes it a lot more interesting to go affordable.
Yeah.
And you're always going to have renters at affordable. You might not always have renters at the high end. The other thing that makes me believe it might happen is when you think about it, like my parents have told me about times when, like, oh, I remember we looked at a rental property. It was 6 units, blah, blah, blah. We could get in for 0 down. Like that was a thing at one point in time. You could get in with 0 down, 3% down, 5% down.
The ebbs and flows.
40 years ago.
Yeah.
And then they added in. They started, okay, now I need a minimum of 10, minimum of 20, minimum of 25. So like I'm like, this kind of makes sense. As the prices go up, they're kind of increasing the requirement for down payment, and it's a big risk mitigation thing as well.
Yeah, so watch out for that news. We don't want to fearmonger and put something out there because it could also be complete nonsense.
Means you have to buy now. Call us. Buy as many places as you can. Let's leverage it to the max.
Get it now. Get those refinances going. But I talked to my buddy, and he's like, you know what? These images come out every now and again, memes or whatever you want to call them, and be like, oh, minimum down payments going from 5% to 10% on residential homes. And then it never actually
There
happens.
is a ton of
It's
false
complete,
news. Yeah.
And then there's also the wording of that. It's like, all right, 35% on investment properties. Now, people
My
use
primary residence is a 24 unit.
but people sometimes say investment unit to mean one thing and then say income property to mean another. They have put out a lot of when the last federal election happened, there was a lot of talk around targeting absent, out of country owners, right, and calling those investment properties. People who were not residents,
Parking cash, basically. Yeah.
Yeah. So maybe that's more targeting that sort of thing. Don't know, but that'll be interesting news when it comes out. There was a Biden executive order to effectively, it didn't say a whole lot, but we're switching to crypto here for a second. I don't know if you saw this, but he gave an executive order to sort of look at the regulation, the uses, and even the idea of a digital currency for the U.S. So all these oversight effectively and legitimizing, for lack of a better term, of the crypto coin space. And at first, the market responded really well because part of crypto's adoption challenges have been with the idea of like, is it legitimate? Is it not? How's the government going to treat it? And for the average person, especially maybe of a certain age that's not especially familiar or up on the crypto space, the lack of a government sign off has maybe held the coins back.
Big time.
And the
Big
initial
time.
news sounded like, all right, well, if the government's going to get involved, provided they don't squash everything, they are going to legitimize this space. It's the same thing about how, when marijuana was legalized or decriminalized, whatever you want to call it, it actually helped the adoption and made it a place where people felt more comfortable investing into it, right?
Why are they doing this?
Well, I think they're doing it because they have to. They are realizing that they're being left behind, and you can either bury your head in the sand and pretend this is not going to be a thing, or you can get into the space and bring some regulation to it. Also, if you look at the big case of SEC versus Ripple, they're trying to find this legislative arm, who is going to oversee the crypto space, because maybe it shouldn't be the SEC, maybe it should be some other branch that's monitoring this stuff. And there's been adoption by other countries just with balancing ledgers and using some of these coins to expedite transactions. It seems odd that the American economy would not bring this sort of currency into their banking system,
Two things. Full disclosure, we are invested in crypto.
Yeah, totally. And I didn't know how to read this news at first either.
Would you say it's similar to the marijuana thing? I feel like it's an item of either they have to go down the path of making it super illegal and trying to police the crap out of it and spending a ton of money and making it this hell-bent riot between people and the government, or they try and figure it out, legitimize it a bit, and tax the crap out of it.
There's probably a big section of it that's the latter. But also, I'll contact a guy that I talked to a lot about this stuff. He mentioned that something like 40 million people in the U.S. are either employed in the cryptocurrency space or invested and actively trading.
Okay.
And that's a big percentage of the population, and it seems to reason that it's only going to grow.
Yeah.
So I think they're trying to get on board to this space because it's going to continue to operate whether the government intervenes or not. So they're trying to get involved. So initially that caused a little bump in the favor of cryptocurrencies because it's all right, this is a step towards maybe broader scale adoption. Yeah. And then people sort of step back and say, okay.
Wait a second, is this good?
When has extra legislation and government oversight been beneficial?
It's no
not
longer
really
the
sure,
Wild
and
West.
it pulled some things back a little bit.
Yeah.
I think it's going to bring some sanity maybe to the crypto space. The coin that you're invested in or the product that you're invested in that space has to actually have use.
Yeah.
It can't just be a gimmick, just running for the sake of.
These pyramid scheme ones are the ones that get registered and they say they're going to do all these things and they never come through with it.
Yeah. Maybe the coins that actually serve value within the existing banking framework are going to be the ones that hold value.
Potentially, yeah. I think it makes sense. Some of the things I've heard even in the recent months of just how much illegal stuff takes place through crypto, it's kind of crazy, and I can see why they'd want to be involved in that. And I think it will legitimize it. The biggest thing, I guess, for me that I think of when I hear about this is I think it might be too late now. I feel like a lot of the investments have passed. The exciting, crazy ones and the big growth moments, and if you're going to be a founder, I feel like a lot of potential's been lost. But I guess on the flip side, with things becoming legal, there's also not legal, but again, like you said, adopted. There is a lot more opportunity as well that gets brought to the table to create businesses around the new policies and expectations for it.
If you look at any major market space, there ends up only being 4 or 5 players, right? In the software beverage game, there's Pepsi and Coke.
Yeah.
Right. Even now, all of the beer companies have kind of consolidated. If you go across major industries, especially consumer based, kind of the cream rises to the top, and you might have 3 or 4 major players.
Yeah.
So all these coins, all these altcoins, can't really have that much use probably long term. I don't think
they're going to melt away.
I'm naive to that space, but at least in terms of widespread adoption, in the same way that everyone references things off the American dollar or a couple other main currencies of record. Yeah, there's all these other currencies, but there's going to be a couple that end up being where people park their money in times of uncertainty and all these things.
Yeah.
So I think there'll be a separation of widely adopted coins and then these other fringe products. Just how long it takes and what this is going to look like and what the bumpy road is going to be towards that. It's going to be really, really interesting. Could be huge, huge gains.
I think there'll be some massive gains for some people, and there'll be some massive losses on the other end.
There also could be some new emerging federal-based coins.
There's going to be there already is a new wealth based on like I feel like wealth always been
Yeah.
old school. And there's just like this crazy. I saw a
Yeah.
thing too about how a lot of these places that have no like tax laws based on like online incomes and things like that, like their populations are booming and their luxury sectors are booming because everyone with like crypto money and all that's just like selling, renouncing their citizenship wherever they're from and moving to these different places like Barbados or whatever to get
Yeah.
set up and just set up a little LLC and take all their money out.
Well, also think how many like billions of dollars there are around the world that is not currently invested in the crypto space because they don't feel comfortable in that space, and the people handling their money
trillions.
are not yet. Yeah, trillions
Trillions.
of dollars, right? So you have this little crypto space. If it reaches that point of widespread adoption, and all of those trillions of dollars go into it,
It's gonna be psycho.
there's going to be a run there. But we are not investment advisors, so who the heck knows?
This is our new protocol.
Yeah.
The last thing we had on here, and then we've talked about it multiple times because it is so prevalent, is inflation hitting 8% in the U.S. And on the same note, interest rates are continuing to rise. I've been harping it. I'm going to keep harping it. If inflation's going nuts, interest rates are going up, and you're seeing every single thing that you touch be more costly and harder to get, something's got to give. And I feel like the general public is starting to change their mind, but I feel like the overall news is saying nothing about it. Like, I feel like the news, I feel like everyone's kind of like, holy crap, the Ukraine-Russia thing, which is crazy, super sad, all those items. But on the flip side, you also kind of need to watch your bag a little bit and be like, hey, there might be something coming down the pipe here that might cause a serious issue. It's also, if you look back in history, there's been like pandemics, war, depression, or war,
then booms.
pandemic, depression. It followed a lot of
of
times.
booms afterwards.
A lot of times they follow with booms. I'm just struggling to see how this is going to be a boom because in the
We
back
also
in the
have
day,
had all at once.
this is the thing, we've had it all at once, and back in the day, the booms came with a lot of industrial manufacturing and stuff that went into the war.
Yeah.
We don't quite work like that anymore. Like, it's not like now, it's like everyone's just dropping their job and we're all going to build a factory down in the waterfront and crank out boats now. Like,
Yeah.
that's not a thing.
Also, everything moves so much quicker that used to happen over a series of years. And
Yeah.
now with the global economy, things happen super quickly. So we actually have had the boom in the middle of the pandemic. Like, we didn't even wait for the pandemic to end. We just boomed simultaneously to it because it used to be, coming out of a recession through fiscal policy, it used to take a long time to get out of that. And now, it happens so quickly. Like, we're having the boom and the bust at the same time. It's a very cool, weird thing that's happening.
Yeah.
Last little note, I want to see if you saw this.
Yeah.
The Ukraine-Russian situation has obviously impacted a lot of corporate brands and how they're responding to the war. And recently,
Their involvement with Russia.
McDonald's, PepsiCo, Starbucks all closed all of their shops in Russia, kind of effective this week.
That's insane. I think I get what they're doing. Everyone's doing this, where they're shutting down their business with Russia, inability to take investments from Russia, no interest. Like, a lot of the billionaires are giving things up that aren't in support of it, and the ones that are, people are like, you can't do things with us, and blah blah blah.
Yeah.
They're removing the names from jerseys. Companies are pulling out of there, and so honestly, I think it's a good idea. It's like, instead of going like fighting this war with bullets and bombs, let's do it like kind of on a technology, political, and a business level.
Yeah.
And try and end this in a way that's better. To be honest with you, though, lives will still be lost because there'll be a lot of people that'll go hungry. They can't work at these places.
Well, this is the thing, and those
bring these
corporations
incomes.
are saying that they are going to take care of their workers, meaning they're going to continue to pay them at least for a period of time. But how long could that last? And how do you return? At what point does the conflict resolve enough that you're saying, okay, now we're okay to do business back there? And this is tricky when you start to combine, international brands in conflicts. I don't know, man. It's a
boiling
changing
out
time.
to another level.
Yeah.
I think the one that like I'm still thinking about this is like, everyone thinks, okay, so if it's a war and like 300 soldiers die, like that's terrible. That is super bad. But this same thing will have like forcing a country into a depression of that largest scale.
Yeah.
Like, there could be a lot more impact on the general population, the average person that lives there, and like the sickness, the health, like death rates. Like, it could be as high or worse. And so I think a lot of people right now on a press basis will be like, oh, this is way better. It's so smart that these brands are doing this and da-da-da-da, which I don't disagree with 100%, but I think there's also a huge impact that people don't pay attention to.
Yeah. It's also a different strategy because in the past it was, tariff and trade. Like, you'd hammer them on those things.
Yeah.
And you'd make it impossible for them to kind of trade comfortably in the international space. But to remove someone's cheeseburgers and lattes is like some new level of
Now
psychological
it's some
warfare.
personal shit now.
Right?
The general public's going to start rioting.
It's meant to demoralize the population in a weird. It's so
Yeah.
funny to think of like cheeseburgers as demoralizing people. It
you're
could just come up
messing-
like all the restaurants are gonna be super healthy because like we got rid of Pepsi and
They're ultra
McDonald's and
fit
Starbucks.
humans now.
Yeah.
I think it's something to consider too. Also, when for investments, if you're looking at your investments that you have in these companies, like a lot of these were making like 5 to 10% of their
Oh, I think
gross
McDonald's.
incomes in
I think it's
Russia.
8 or 9% in Russia and Ukraine.
Which is nuts. When you think about how big McDonald's is in North America and even internationally, like that's a huge portion of their. I wouldn't think it would be that much. So things to consider, obviously, when you're making these investments, again, is looking at what's going on with these companies, and there might be a little bit of a pause where it's time to pull back out and see what's going to happen, because I think a lot of them, their numbers moving forward could get beat. Plus, there'll be things that are happening here locally that are going to beat them up.
It's also slightly ironic because the undercurrent of a lot of this conflict has to do with westernization and its encroachment into, what traditional or nationalist Russians would say is their historic identity is, Russian. And there's nothing more Western and American than Starbucks and McDonald's, right? So anyway, we're not political scientists either, so we're going to move on to our topic of the day. And this is kind of especially relevant right now because there's a lot of homeowners out there, buying their first property. And whether this has always been their goal or whether they're now looking at this as an objective because of the pricing, they're kind of weighing their options of single family home or a multi-unit property for their first purchase. And we've talked about this a little bit before.
Yeah, I think we've touched on this before. We've kind of shared our views a little bit. We want to go into a little bit deeper because I think this is a question that we get all the time. And I think it's predominantly more like obviously the younger buyers. They're trying to get involved and they're trying to, like you said, decide between do you get your rental property or do you get your home now, lock that in because the prices are always going to keep going up, and then work on the rental property second. There's an intangible to this, no matter what we say, that it's your personal preference. Like if you just can't live without that house, I mean, that's kind of vetoes everything we say. And if you just can't live without making a rental income, I mean, I understand that. That also vetoes everything we say. So we're both going to take like a side.
Okay, let's do it.
I think.
Yeah.
And
so the sides to outline the rules of engagement here. So the sides are either
no punching,
buying not the face, buying a single family home for your first property, or buying, say, a duplex. Neil, you have the floor.
Okay, so I'm team duplex.
Okay.
Speaking that's what I bought first. Well, technically no, actually I lied, but I'm team duplex, and my reason being, like right off the hop, number one thing is you're increasing your income. Like when you buy a duplex, you're putting your money in. So yeah, it's locked in just like it would be for a single family home. You can still do your 5% down, 10% down. CMHC will still give you mortgage insurance. You have to claim owner occupied. So let's say you do owner occupy that. You then get 50% or even almost 80% of your mortgage payment often covered by the rental income that you have. So now you're paying that small amount plus your utilities.
Yeah.
Okay. So oftentimes that's cheaper than the rent you were paying.
Totally.
So you're now banking cash there, plus you're making the rental income. So your income on paper has increased, plus you have the equity in the property, and it's easier to control the value creation in that property by increasing the rent. By increasing the rent, you can cause you can force the appreciation of your property.
Right.
So,
but we live in a world right now where you can't increase your rent. And it's never been harder to be a landlord than in this exact moment. First of all, getting vacant possession of the property is very challenging. You'll get one through your right to own or occupy. Getting that second unit vacant, it's not a slam dunk that's just going to add so much money to your income, because it could be the case that they're down there paying $700 a month, utilities included.
Yep.
And if they're using the water, they're using the heat. That might
cost more than what they're worth.
It could actually cost more than what they're worth. And you say that in jest, but that is a case. So it's not as simple as you are going to be able to increase the rent and improve that cash flow.
I agree to an extent. I don't think that's a frequent answer. Like realistically, if you're buying a duplex to live in it, first of all, we do have a rent cap right now. the rules are lifting, and most places do have an opportunity to basically buy out your other tenant. In this case, if you're really being that person where you're comfortable living a rental, you're probably also comfortable to bite the bullet and move into the cheaper unit
Right.
to
Yeah,
get the
that's a good
rent where it
strategy.
needs to be.
Yeah.
And then additionally doing a buyout for the other tenant. You can usually, if you live there, you see the tenant every day, you can have that conversation and give them a buyout to be able to move into it. And you can make some improvements on the property and be able to increase those rents to where they need to be to help offset it. My other big thing, and like a lot of people, like just to beat up what you're about to say, but if you look at something like a $300,000 house, which is almost non-existent now, but a $300,000 condo, once you factor in all your payments, your mortgage is $1,600, your condo fees are $300, your tax, blah, 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 you're paying $2,200 a month. Realistically, you're probably coming out of a rent that costs you a lot less than that.
Yep.
Even if you bought an investment property and didn't move into it, and kept your rental. Like a lot of people I know have rentals around $1,300, $1,400, or they split a 2-bedroom for $1,000 each. That will 99.9% of the time be cheaper than you going out and buying a single family. Versus if you go out, you buy a rental, you can get it to cash flow a little bit. That cash flow is actually going to eat away at your monthly expenses. Plus, you're building equity in a property, so you're actually going to be in a better place sooner to buy another place.
Well, this was sort of, and I understand your way of thinking, and it's been correct for a long time. The challenge is right now, and maybe moving forward, is that single-family homes certainly seem to be appreciating at a faster rate than
Big time.
multi-unit properties, and that's going to continue. All these things, for all the reasons we just talked about, right? So, historically, like anytime you buy a multi-unit property, you're thinking about your exit strategy. All right, I'm going to be here, I'm going to live in one unit, I'm going to rent the other, and then I'm going to maybe try to get another one.
Yep.
And there was some logic behind that because you live economically, you save some money, you maybe get some lift, you buy another, and so on and so forth. It's now the case where you may get a bigger lift quicker in a single-family home. So if you can
Often.
bite that bullet of like, yes, my expenses are maybe $1,000 more net per month than if I was in a multi-unit, you could actually be increasing your net worth by $1,000 more than the multi-unit property would be going up.
Through
right? So
appreciation.
you could be appreciating at $4,000 a month, right? So you could be still up net maybe $1,500 compared to if you were in a multi-unit property. And if we're thinking exit strategy, well, you can exit out of that single-family home, refinance it, and still buy another multi-unit property. Also, if you buy the correct single-family home, you can still own or occupy the next duplex. This has been something that I'm was always concerned about is, you want to buy as many properties with 5% down as possible because of liquidity, available cash, And if you're going from a duplex to another duplex, that is a logical, realistic move. And so lenders like that, and they're saying you're fine with 5% down. If you're moving from a $700,000 single-family home and trying to tell the lender that you're moving into a $500,000 duplex, that's not really realistic.
Yeah.
But if you're making a smaller first-time home purchase, which is kind of what we're referencing here, where we're comparing first purchases, you can make a case of, we bought this home for $400,000, and then 12 months later, we're moving into a duplex that's $500,000, and we're going to own or occupy that at 5% down. So that is quite a logical story. If you want to maybe go a little further out of town, get a cheap house, stay there for a year, but still pick up a multi-unit property the next year, I think you'll be able to do it with 5% down.
Yeah, I agree. The other thing is, too, is something to consider when you're looking at buying a house. It might be what you consider an increased lifestyle. Like, it might be a little nicer to live in a single family than it is a duplex going through it. So, the other one I think that's worth considering, even though I said I'm team rental, on a single family, you can do house hacking. Like, I have a lot of younger clients like, look, I don't really want to buy a duplex, or duplexes can be expensive. Like, yes, homes are appreciating faster, but in the same neighborhoods, a lot of times a single family bungalow and a single family bungalow with a basement apartment, the bungalow with the basement apartment is going to sell for $100,000 more.
In some cases,
Then, depending on the condition, which makes it harder for them to access. So they get the single family and they do room rentals. That's quite common. I think somebody on our team actually did that. And shout out Tanner. But yeah, so I think there's an option there. I still really like the rental idea because it also gets you in the game immediately. I find once you get a single family, it's hard to not then kind of consume the lifestyle, which becomes, okay, so now you're in a single family, you're in a single family neighborhood. Now you're getting a new vehicle. Now you're getting all the upgrades for your house. Now you want a new kitchen. Now you want all this. And you're like, well, it's my single family home. I'm going to go ahead and do these things, which do add value to the house. But a lot of times, a $70,000 kitchen doesn't add $70,000 to your house.
And then they make you a little soft when you're going like, what do I have to live in next? Like, I don't want to downgrade here.
And then that's also your other thing is it's really hard to then go from a single family into a multi-unit property to make that change. Whereas if you start in a multi-unit, you understand that you get the business. It kind of puts a little bit of oomph in you. You get used to having a little bit of elbow grease in there, and then you always get to upgrade, and you get that feeling of upgrading. So it kind of sets the tone and kind of gives you, I feel like I feel like it also gives you motivation because you're like, I don't want to live here for more than 2 years. So you're like,
Yeah,
I'm
that's
going to
true.
bust my butt to get through this place and get to the next one.
Yeah. I feel like there may be opportunities now to buy single family homes for less than duplexes that are actually going to be more modest than some of the duplexes. And people realize I'm going to keep this single family home, because keeping a single family home now with the rate of appreciation and the rate of the rents is becoming much more palatable. Where it used to be like, oh, if a single family home is not really worthwhile to rent, I'll just sell it.
Yeah.
Now I think people are going to keep those longer. So I think the ability to, move from a single family home but still keep it and rent it is stronger than it ever was. Plus, integration of secondary suites, which are becoming really prevalent. You can really upgrade these single family homes now if that's something you want to do. I think that's actually a really smart alternative to buying the duplex that might be $550,000. Well, if you can find the right bungalow for $400,000 and put a basement suite in there legally, you could end up ahead. We had guests on the show that did that also.
I was going to say that best case, you buy a single family home and you put an apartment in the bottom.
Yeah, so there's a nice hybrid. But you touched on something there which I think is really interesting. We're kind of playing devil's advocate on both sides of this, because I think it is a case-by-case scenario, and you can make a really good argument in the right context for either. But one of the things I ask people when they talk about this is, what's your spousal situation? Because you may have different priorities in terms of what your living space are, and it's maybe easier to do some of these things while you're single and in that part of your life. You're laughing here, but it's true. You're supposed.
It's super, super, super important.
If you want to be a landlord, especially a live-in landlord, your spouse needs to be all in with it.
Yeah, 100%. I forget. I'm laughing because I forget about this, and I haven't really had to consider this during my positions. But a lot of my good close friends who are in that position, I'm like, do this, do that, do that. You gotta make this move. You gotta make this move. And he's like, yeah no, we're not putting a basement apartment in the house. And I'm like, why not? And like, well, we don't really want to have somebody living in the house with us.
Which I get, man.
I can appreciate and respect.
But at a certain time in your lives, if you're both into that, it can set you up for life, right? You do a couple savvy investments if you're willing to bite the bullet for a little while. And people are increasing like, well, if we're going to have to be in a modest home anyway, we might as well try to get something that's really advantageous, because our generation, I'm a little older than you, but they're now saying that we're likely to move 4 to 7 times. The average
Through your
person,
whole lifetime?
Yeah. Through our adult life, through properties, something like 4 to 7 times.
Why?
Because we need to upgrade properties, right? Which we get a lift, we buy another. It's not like back in the day where our parents bought like one home, then bought a second home, and stayed there forever. Now people buy their first home, buy their second home, buy their third home, stay there for a while, later downsize to a condo, right? So people are realizing that these homes aren't forever. So maybe we tough it out for a little bit of time and go to the next home and the next home and the next home.
Yeah. That's also, I'm just thinking about that. It'd be weird if you never owned a rental before, think you want one, buy it, move into it, and your life is literally hell because you hate dealing with tenants, or you have a bad tenant. You assume a bad tenant from the previous person, and there's a ton of noise being made and things like that just drive you nuts. So yeah, there's definitely, I say this to a lot of people, you gotta, like you said, the situation-based thing, you gotta be mentally prepared and really have the desire to do it, because by no means is it just like a passive income like a lot of people will say it is. And be prepared that if you make that decision, it might not be super pleasurable for the first little while. And also be prepared to always have your exit strategy ready to go. So you can make a move. Even if it means just you buy a duplex, you move in, you're like, I absolutely hate this. Rent the unit and move back into an apartment by yourself.
Yep. And I just think in this market right now, with the rate that single family homes are appreciating, and with the cost of 2-unit dwellings, like, yes, the second unit will offset your income, but the lift you can get off these single family homes in a really short time makes it interesting.
Assuming you're comfortable with the cash flow.
Yeah, you got to carry that cash flow, but your lift in 12 to 18 months could be significant. So, a couple opposing points there. I'd love to hear what people have had success with. I'd be curious to hear if anyone did a good job of buying a single family home and then went on to buy rentals. Because now that I think about it,
you did the same thing. You did live in
rentals. I did live. I can't think of a single person I know that owned a single family house and then really got into rentals, unless we're talking, then when they were 40 and very established in business, they circled back and bought maybe larger scale rentals. Can you think of anyone like young who?
I have a client who did. He bought. He didn't get heavily into rentals. He's only bought one since he bought his house. but he bought a single family, but he bought new construction right before things boomed. And so he got a massive lift on the new construction. Then he was able to pull out a HELOC, utilize that to buy a duplex, renovate the duplex up, and kind of go from there. I'm trying to think who else. I don't know. Like you said, it's tough. I also found like he did the same thing. He renovated up the house, and did some work. I think he listens too, so I'm probably gonna get a text from this. But it's hard
like,
not to.
I don't want to live in a duplex now. Yeah.
Yeah, and you're exactly. You don't really want to live in the duplex, and you get comfortable in your current space. Even I think could say one of my staff, he made the joke a couple days ago and it was like, yeah, like we bought a house and now we're starting to slowly crawl into the basement, even though we said we were going to turn that into a rental unit. It's kind of nice having a rec room. And so now it's like, oh, maybe not.
Yeah, you got to capitalize when you're the hungriest. So that's interesting. Again, comment, give us some feedback as to which you've done or which you think you want to do. No wrong answer. It's case by case, but interesting arguments on both sides.
I'm still for rental.
Yeah,
I think it sets. I think the mindset gets made by going rental. I think you're forced yourself in a situation. I think that's why I like the rental. Is your hands now forced. You have to then move forward.
You jump in and then you figure out how to swim.
Exactly.
Otherwise, like you're in the lounging chair and you're like, oh, I'll get in later.
Exactly.
Yeah. We are going to touch on one more topic that we didn't cover at the beginning, and this is what to expect if you're buying in 2022. I had some people
lose
reach
all your
out.
hair. Look at me.
That was if you're buying in 2019, Neal. That's 3 years in. We've had this question like, hey, what should I expect when I'm buying this year? So we're going to do that in a second, but you've got a question there that you mentioned.
Yeah, I had a question messaged to me, to us, and it was basically on the same note of rentals and all that. And I actually, like I said, went to a lunch today, had the exact same question, and it's, do we incorporate now?
Oh,
we want to buy rentals.
Yeah.
Do we incorporate to do it? My immediate answer is if you're buying your first or one rental property, unless it's big, no.
Yeah.
Just
do not do it.
For the simple fact of like the complexity of it. Like you're adding
there's no point to it.
A layer of complexity. You are the only one and only shareholder. If there was any legal issues, it's coming at you no matter what you do. The company's not old enough to carry any of its own credit. And it's an extra filing at the end of the year. It's an extra tax return at the end of the year. You have no savings on taxes because they still pay the highest rate of tax in a property holding company. There's really nothing that's too exciting for doing it. Holding it personally, you can still write off your mileage. You can still write off your expenses. You still claim your rental income. Like it just doesn't make sense to do it. And additionally, you might get into it and find that you're not interested. And you're like, oh crap, I spent an extra $2,000 to incorporate, an extra $1,500 on a tax return, and I had all this other bull crap to do, and I had to get special bank accounts. And I've found grade A lenders, if it's in a company name, sometimes they're not interested in being involved, or they have other stipulations or higher expectations for down payments or lower refis.
Yeah, you probably have to do annual reporting for your corporation that has nothing going on.
Yeah, literally. It's a huge pain in the butt until you're like, okay, if you do one and you're like, all right, I'm ready to roll in this, I'm going to go crazy with this, I want to start buying one every year and then go nuts, then I'm like, yeah, go for it. You can do it on your second one, go for it, because you're going to start doing it. Because I did face the issue now where I started and I bought my first 2 or 3 personally, and I wanted to roll one of them because it's a development site into a company, and I did have to pay capital gains, and I did have to pay D-transfer tax again. So there is some negatives. Like if you are thinking that, like you do have to pay D-transfer tax to then, even though you own the company and you own the property, to transfer it into your company, which you own 100% of, you still have to pay 1.5% against the current value of the property. And so in my case, I face this problem because I've owned the place for 3 or 4 years. It's tripled in value. When I rolled it in, like my lawyer's like, what's the appraised value? And I'm like, this. And he's like, you literally have to pay a capital gains bill for selling this to your company.
To yourself.
Even though I'm realistically not going to get any money for it, I have to pay that big capital gains bill plus D-transfer tax on that sale price, because the sale price is going to be pretty much what you're appraised or slightly below.
Yeah, I mean, you're talking about a very unique scenario, though, right? For a particular property that you had to roll into your corp for a specific reason. Like I've got a number of, residential family homes, duplexes in my personal name that there'll never be a reason that those need to get rolled into my corp.
Exactly. And that's the other thing. I was say, realistically, most of these places you're not going to need to roll into a corp anyways. Yeah. So it's like you wouldn't face that. But that would be the one negative I would say that you could potentially face. So yeah, that's something that I don't think is worth doing unless you're getting serious and you're ready to make the move.
As soon as the
insurance
bank
is
says,
more expensive too.
Yeah. As soon as the bank says you have to do commercial financing, then incorporate. Until they tell you to have to do commercial financing, do not incorporate, is my 2 cents.
Yeah. I don't know if you've had any liability issues. I have had some stuff, so I can see the value in it getting there. But again, when you only have a few properties, I suspect you're not going to have that issue. And it's really just, it's not worth it off the hop. And then he had some ask about some tax questions. We have somebody that's going to come on and just talk shop about taxes for both, just I think probably business and then also the rental property aspect of things.
All right, let's dive into this as our last topic today. What to expect if you're buying in 2022. Neal, kick us off. Number one.
Getting beat to shit. Like you're going to first have to fight people to get into the place, and then you're going to see your agent fight another agent in the driveway.
Yeah. Well, let's go through our nice little list.
Well, we have a nice little list that makes it a little clearer.
But that's pretty much right.
Yeah. So right off the hop, the number one thing when you are going to a viewing, if you get in, because they are literally fully booking, you might have to sit outside and squeeze in between viewings, is you're going to get like 10 or 15 minutes to see this place. And it's going to be a high pressure one because you're going to be looking, and you're like, I got to bid like crazy. And there's going to be another agent sitting outside with their clients, and you're going to be following somebody out the door. Yeah.
So, short viewing windows. We're talking a few days and sometimes just 15 minutes in the property. This isn't a case of where you'll be like, okay, Saturday at 3 o'clock, maybe 3 to 4 works for me. It's like, no. Viewings
it's available
are Thursday and
8
Friday,
PM.
and there's a window, 8:15 to 8:30. We've got to be there.
Yeah.
Second item.
Paying way over asking.
Yep.
So the stats are showing, I think, about 115%, so 15% over ask on average. But that's an average. Honestly, it's going as high as 25 to 35% over.
Yep.
I think more commonly, especially for single-family homes, that's where it's going. Obviously, if a house is overpriced, it's overpriced. But you got to be prepared that, you're approved for 500. You should really be looking at houses for like 399 because you need that room to bid it up. Even potentially lower than that, 349. Like it's crazy. Like be prepared that sticker price really doesn't mean much. You need to look at some comparables and ask your agent, like, where is this going?
Yeah, so what to expect, number 2, paying 15 to 35% over the asking price. C, third one, the one that stings the worst.
Very disheartening.
Yep.
Losing bids.
Bids, plural.
Big S. You can be bidding relentlessly, very strong, over ask, great conditions, everything, letters, the whole works, and you can keep losing. Even with a great agent, you can still lose because there's things you just can't necessarily factor in. And some people are willing to pay way more even than a property's worth. Sometimes they have intangible reasons, like they have family on the street or they need it for a certain reason or they're on a specific timeline. So you need to be prepared to lose it and not lose steam because that's just part of the game. And there's really, I don't want to say there's nothing you can do, but you can
it's going to happen. The reality is it's going to happen. So you need to expect it. You need to be prepared for that.
Yeah.
Fourth item, speaking of facing competition and waiving conditions, you need to understand that this may happen. You may have the highest price, but lose because you have a financing condition and or an inspection condition in there. You need to expect that conversation will be had between you and your agent about conditions.
Exactly. And this is a big one. I think that people need to get way more understanding. Being picky now will make your process literally impossible. If you get into a house and you're like, oh my God, there's a this in the basement and it's gonna cost $5,000, you kind of just have to stomach that because you need to think in your head, if this house was perfect, would I have gotten it for $435? No, it might go for $475. Right?
This is the conversation sometimes that you're having when clients ask about whether or not they should waive inspection. And I'm going to be clear here. An agent cannot advise you to waive an inspection. At least an agent would be dumb to ever say, you should waive the inspection. For liability reasons, I can't say that to a client ever.
Yeah.
But I'd be remiss in my duties to them if I didn't say, just so you know, in competition, other people are likely possible to waive their inspection clause.
Yep.
And that offer will be viewed by the seller as more competitive than an offer that has an inspection clause in there.
Yep.
And they ask, well, what does that mean? And I say, well, it could mean all kinds of things. But the question that they often find themselves asking, and I pose it to them sometimes directly, is if we do the inspection and we come up with an item here that's $15,000, are you going to walk away from the home? And they say, well, no, probably not.
Okay.
And then they start to say, well, if that's the case, why am I going to have an inspection? And we talked about this when we were talking about the guys at Blue Nose Inspection there. Oftentimes people are bringing them back after they've owned the property. And then you can get this little list like, okay, we mentally were prepared for potentially having this work. We feel we did good due diligence up front. We didn't get an inspection, but now we got it after the fact, and we can.
Hopefully, too, you can get a property disclosure statement before you write your offer, and hopefully they're honest on there, and you can kind of get a gauge. But yeah, this is something that you need to start being comfortable to waive. And I had the same conversation with somebody a couple of years ago when it was one of my first clients that did it, and I was like, "You're cool with this?" He's like, "Yeah, like in my head, I just expect that I might spend $25,000." He said, "So if I'm paying $600 for this place, in my head, I'm paying $625." And if I don't spend it, bonus. And if I have to, that's what I plan for.
Yeah, and they've had that mindset in other markets for quite some time. So that's the fourth item what to expect when you're buying in 2022, which is facing competition that waives conditions such as financing inspection. The fifth item
is meeting your seller's needs first and foremost. And this is something that's becoming very important.
Yep.
And it's also kind of hard. It feels crazy. Like I just gave you $200,000 more than you listed your property for.
Yeah, and you're not letting me have the drapes?
And you will not let me have the drapes or move in on this day. And they're like, no, because there's also 4 more people willing to give me $200,000 and take the dates and allow me to keep my drapes.
Yeah, so if you haven't asked your agent or haven't had this conversation with your agent when you're offering, like, what does the seller want for a closing date?
Yeah.
Right? What are the inclusions in this deal? What are they
That's
offering?
important.
You know, you need to expect that those conversations are going to come up and be prepared to accommodate a seller. Even when you think you've done everything you can to accommodate the seller, realize that someone else is going to try to do more to accommodate that seller.
Yeah. Those are small things. And like, I know, again, this is where a lot of times you have to kind of put aside a lot of the old notions that there was. Like everyone had, like, I find a lot of my younger clientele has like, oh, my parents told me that I have to get the drapes, I have to get the mirrors, make sure you include this, make sure you include that. Unfortunately, the market's not what it used to be when they could do that. When it was a buyer's market, you can go in and beat them up and be like, I want this date, I want this price, I want this item.
Totally.
Throw in your dog, throw in your chairs. Like, and people did all that stuff. Now it's quite the opposite. You need to give up everything you can to try and convince that seller to go to you.
Realtors will get this one. You know, when you do the inspection and there's the inspector and then there's the client and then there's like the client's friends or parents or whatever, and like a little thing
The contractor
comes up,
uncle.
and they go, well, that's something you can go back to the seller about. And it's like, shut up. We can't go back to the seller about anything. We're lucky we're here right now. We're hoping they don't back out. Like, you kidding me? Like you're worried about
Electrical plug or something like that.
God. Yeah. So again, to recap, what to expect if you're buying in 2022, Neal?
Short viewing windows, paying 15 to 35% over asking, losing bids,
Plural.
facing competition that waives conditions, your financing, your inspection, all those items, and meeting the seller's needs and first and foremost.
Yeah, absolutely. So you probably already know that, but if you're out there starting the process, that's what you have to look forward to. Any other last thoughts, Neal? We're going to wrap up.
Yeah, I want to end this with not to make it sound like all doom and gloom. I think if you still need a house, there's still opportunities out there. I think there's still buys that are worthwhile making. I think there's some that aren't. I see some houses I'm like, I think you're going crazy. But if you intend to stay in that for 20 years, maybe it's not the end of the world, or you really want that location, it's not the end of the world. But I think you can still get out there. You can still make bids. And as an investor, you're not too late. I think there's still a lot of run. Yes, rates are going up. Yes, costs are going up. I think things are going to change. But on the flip side, there's a ton of immigration, and Canada in general looks better and better every day with the world's turmoil, climate turmoil, all the other things that are taking place. So I think we have a lot of strength here and room to go. But you need to be aware of what's going on, and I think you need to be a little more conscientious. I think you could get away with a little bit more slack before. Now it's time to be a little more astute and a little more on the ball.
Think about substitution.
Yeah.
How standardized is the product that I'm buying, right? Are there 1,000 of these homes, or is this kind of a one of one, right?
Yeah.
And if it's a one of one, that's where you can make a big swing for the fences. If it's a standardized product, you have to be mindful that if there's a dip in the market, you may not get that money back.
Yeah.
So, be careful where you put that 35% over asking price bid.
100%.
All right.
Thanks for listening.
Master Keys, check us out online. Follow us on social media at Master Keys Podcast. We're everywhere now. We're going to start the Patreon. I don't know how to say that word.
Patreon. Yeah, so we're going to start a Patreon with more in-depth things where we literally go over actual breakdowns of the numbers, some of the investments that we're making, how we're getting into properties with certain structures, whether it be vendor takebacks, zero downs, all these kinds of things. So if you're interested in that, maybe shoot us a message, let us know. And also if you have questions, if you can shoot us a message to one of the Master Keys profiles or our email.
Comment in there and we'll try to respond in the comments.
We're going to try and capture them all and we can try and respond. We really appreciate that. So,
awesome.
Thanks for listening.
Thanks for checking out the episode. Don't forget to like, subscribe, and press the bell button for notifications. If this is your first time here, check out our back catalog for more episodes. Thanks so much for watching.
When I was broke, I had rich habits. When I was broke, I had rich habits.